Let's go over what happened today of the BBIG. We had a massive sell-off in the markets. It was partially due to that CPI read. We had kind of I mean, 82, right? It's definitely not considered the best situation, but still, inflation is going down, and I guess that's probably the reason why the markets recovered. It was kind of a panic sell, or it was just an impulsive, emotional like event, and then everything came back. So those trades are actually very ideal for scalpers and day traders, momentum traders. They're called gappers or gap down trades. So they wait for the panic sell and long the bottom and wait for a recovery. Usually, 10% or 5% around there. So it's a great way to make your profit target within literally an hour or less. Anyway, so let's go ahead and start with the correlation between SPY and BBIG. So yesterday we were able to distinguish that we were in correlation, or we were in phase with the SPY, and that helped us determine whether BBIG was going to go down based on a CPI miss or beat, and it certainly helped. So SPY went down, BBIG mirrored it, it recovered it. SPY recovered, BBIG also recovered. Now here we're starting to face just a little bit of an inverse correlation right here. So I'm not sure what to read of this just yet because it's such little information, and we're also within the 1 hour chart. All right, moving on. So let's go and review our raw price action based on this this formation. So this is the Elliott wave expanding triangle that we've been talking about for a couple days now. Please remember that I did say that it's not yet confirmed, and this channel, this descending channel, would essentially be the path to that support bottom. If we did go to the C target here, this would essentially make us, or it would essentially validate this expanding triangle. We didn't, however, and we stopped right. Our support was right down here, and that support is actually not random, because I'll show you why. If you take this trend line and match it to that bottom, you can see that we now have a perfectly the horizontal line here, and this is a right-angled ascending broadening wedge. So this is similar to this formation is similar to the formation that we've been looking at on the daily chart, which is this one right over here. This is what I've been calling our bearish structure on a daily. So we would have the A to B and C to D, and we would essentially make another wave, except that this wave would probably be more like this. Let me get another trend line right here, and it would essentially go down and fail and come back up and test our range resistance, or excuse me, it'll probably just test and confirm that there is resistance conversion here, and then continue to the downside. But there's no this is the daily chart, and it is kind of a larger time frame analysis, and it's not validated just yet, so I wouldn't actually call this to be happening right now. First of all, price action is not indicating such a impulsive downside move. That's massive, that's huge. So you can see today that really anything can happen, but luckily we did see the downside coming today, especially if you did get to see the MMAT video that I made yesterday. I was saying how a smaller cap company could actually be an indication of how the markets may react tomorrow. and I was able to show how every RSI time frame was overbought, and it looked like it needed to retrace pretty significantly. And without knowing that the CPI was in a sense a miss, it still kind of realized what we were talking about. But anyway, so yeah, it's important to know that we are within this. More or less is following the lines of a bearish formation. And why I'm biased towards, I am a little guilty of this, but the reason I'm biased towards this right here, and I really would like for it to kind of happen, is because this could actually, this expanding triangle, the Elliott wave triangle, could potentially, have a bullish outcome. Okay, so let me just take a look at the notes right here and see what else we got. Okay, let's move on to this chart here. And okay, so similarly to what we were looking at on sorry about that, guys, just waiting for TradingView to do its thing. Similar to what we were doing here in looking at this horizontal line here, you can see that there was a purpose for this support range, and there was a purpose for us to bounce from that area here. So we actually called this in our written thesis just a couple days ago, and we said that we were likely going to, well, this is what we said that day, but we were likely going to face resistance from both of the 30 and 50 day simple moving averages, and they actually did serve as resistance. And we also said that this is a potential problem. Ascending channels are usually bearish structures, so we absolutely succeeded its nature. It came all the way back down and tested our range support right at the bottom right here, and closed right at our range top right here. Now, the reason we didn't continue going higher is also because the 30-day simple moving average is acting as a form of resistance, and also the now converted support into resistance bottom of the channel is also serving as a form of resistance. So there's a lot of obstacles here for us to kind of hoop through in order for us to continue the upside. Excuse me. That's not to say that the price action can't continue to the upside. I'm just saying that there's a lot. There's just a lot of things in the way here. So, and then right after this, we have the 0.786 at 99 cents. This fib ratio could actually serve as another form of resistance as well. And let's see the notes. Okay, we got that. Okay, so if we were to determine based on just raw price action, it's not always right. You know what I mean? That's what you would consider as my part discretionary, mostly systematic. So my discretion is actually telling me that we're facing several several forms of resistance here in the 4-hour chart, and seeing that we're validating this conversion of support into resistance can lead into a small pullback to the downside. If we do look at this in a larger time frame, you can see that it's probably not failed just yet. So let's see if we can look at it maybe in an 8-hour. Actually, it looks pretty failed or succeeded, because it is a bearish structure from the get-go. So yeah, I think my own discretionary bias is that we can face a small pullback, it could either be to test the SMA 50, or we can also come back down to the O spot 618, which is the inverse golden ratio, at 95.94, which is 96 cents. We can also come back to here and continue to the upside. It doesn't look like it's so significant, or the thing is that we can also consolidate here for a while. I really doubt that we can consolidate because of what happened today. Tomorrow is typically an easier trade for a lot of day traders. The price action was actually kind of bullish towards the end of the session, and that can lead to making the layman or non-educated retail trader to be overly bullish and think that we're going to continue up to the upside, and they can just short it to the previous low, and that can create a panic sell. It could also trigger a lot of stop losses, pressuring the price action to continue to the downside. That's why I'm saying that I'm not particularly biased towards consolidation or sideways trading here. It's definitely up or down. There are ways for us to validate the movement, but we're talking about raw price action here, and just based on candle structure and volume. But we do see a decrease in volume here, especially coming from this bar right down here. That bar has a higher high. This is a lower high. I know this one is lower, and this one came up a little bit, but overall this is still, that last volume bar is still a lower high. Okay, and also another thing to note in raw price action is this here. So we have we have this low here, and then we made a higher low, but then we have now broken market structure by creating, this candle here. The wick is creating now a lower low. So that's an indication of a potential something. And by the looks of this candle structure here, it looks like it's creating, what could be a descending channel in a shorter time frame, and we could sort of draw it in just to see if it is something. But yeah, see, so it looks like we're creating a reversal pattern within whatever's happening here. So it is the 4-hour time frame. So it's going to be just like this. It's a shorter channel. So this is an even smaller channel. So the odds of breaking out at a faster time are greater. So we could essentially sell off a bit, and it looks like we have the bottom of the structure at a very similar target as our support range right here. So the support range bottom looks like it's at about 90 cents. Let's see, the channel support is at 89.34, not even a cent away. So yeah, there is a bit of confluence here. We can consider us going down. We're going to validate that with indicators though, but this is nonetheless, this is a bullish structure, and it signals a reversal in trend. So yeah, let's go ahead and continue here. Let me look at my notes. Okay, so the next chart, this is the daily chart, and we are in ascending channel. Again, it's a bearish structure. It looks like it wanted to fail today, and we excuse me. Whoa, shouldn't have drank all that water. Okay, so it looks like it wanted to fail today, but it actually didn't. It recovered the channel, and however, like I said, again, it's making this structure of lower lows here. So we have to kind of watch out for that. We did say that. Let's see. So it says daily chart, ascending channel has started. The last daily candle print looks bearish. This suggests another test of the support target. So yeah, from our last analysis, we said that we were likely to test the support. Now, we thought that we were going to support at 92, which is the bottom of the structure, but we ended up, wicking down to here, which is usual for a bear market. Usually in bull markets, you don't have like what they call in Wyckoff theory, terminal shakeouts or springs. this like these type of candles, they don't happen as often in bull markets. They happen more in bear markets. So this is the reason why sometimes I say, okay, so we're going to have an entry at 90 cents. We're going to have entry number 2 at 85 cents. And just in case we wick down, it's going to be at 82 cents. And it hits that 82 cent. It's only because we're in a bear market. We trade bear markets differently than how we do bull markets. Although there is an ever evolving climate happening within the entire market space. There's some things just really don't change. What I have noticed in the markets is that trend trading within the last couple years has been pretty dead on. So yeah. Anyway, so let's go ahead and move on. Let me look at my notes. Okay. So the range, yeah, the last thing for this chart right here is just the range. It is a daily chart, so this can take a few sessions in order to realize with impulsive moves to the upside or downside. But the range here would essentially be 93 cents to about $1.11. So that's just basic information, just so you guys kind of know. It doesn't mean that we're going there tomorrow or whatever. It's just to state that that range does exist. Anyway, moving on. So let's go ahead and validate some direction here. And I did mention in my Twitter page that I have partnered with Cripsex Trading. I'll leave their information in the bottom so you guys can be able to follow them on Twitter. They are creating indicators so that we can be able to gain an edge. Sorry, you guys, still burping over here. It's crazy. And let's go over one of those indicators right now. Sorry, guys, I have it somewhere here. Okay, so this is called Armor, and it's a very interesting indicator because it consists of several exponential moving averages that are very close to each other. And the benefit of having several moving averages like this is that it can give you a motion image of what's happening within the trade. Now, what's special about this indicator in particular, it's that it gives you buy and sell signals. So I use this to confirm what I'm feeling, right? So I want you guys to be able to notice that it says long right here, and that just means that it's potentially going to continue to the upside. And if we do continue to the upside, we close at 97 today, so we're facing some resistance at 98.52 according to the 1 hour chart. So the 1 hour chart's very immediate short term. So we can see some resistance right here, followed by probably a retest of 96 and hopefully breaking out and continuing to the upside. Also, I have to say again that we must pay attention to raw price action, because as you can see here, the structure is making lower highs. So it looks like it's actually trying to break out. And also here we can see that we're clearly in a descending channel of sorts. So we are trading this range here. So if it is trying to break out here, that means that we could continue to the upside and come back just like we said just a minute ago. Come back and confirm that this is a valid conversion of resistance into a new support, so that we can continue to the upside, and then essentially come back here and retest this again to convert, in the conversion of resistance into support. We confirm the new support and continue again. Please know that structures like this in smaller time frames do have a higher hit lower hit rate than that of a higher time frame. So I don't necessarily trade based on only this this indicator right here, but it is called. So this is the ARC series of Cripstex. So we are using right now the Cripstex Armor, and this is giving us a long signal. So we're going to verify that with some with the ARC RSI, which can actually be available to you with the with a purchase of any subscription of the Cripstex ARC series indicator. So let's look at the RSI and confirm whatever the Armor is telling us on the 1 hour time frame. So let's start with an immediate short, a micro time frame. This is a 30-minute time frame, and we are in so we're actually approaching the strength percentile of the bullish control zone, which is right in here. This down here is the bull weakness, and you can see that we're still pivoted towards the upside. The moving average is starting to also show that support to the upside, which is indicating a potential upside starting almost immediately. Let's go down to the 15-minute time frame. The 15-minute time frame is also primed to enter bull strength. Let's go to the 5-minute. Man, 5-minute is also pivoted towards the upside. It just made a bullish cross above the moving average. So, oh man, okay. So yeah, this is looking pretty okay. So now let's move on to the next time frame. This is a bi-hourly. It has just crossed into the bullish control zone, of course, in bull weakness, but still we're making an upside move. It's still recommending or suggesting, sorry, continuation to the upside. However, the pivot is just a little bit weak, but you know we can look at other time frames for that. This is the 6 hour. And it looks like it's primed for a bullish cross between the moving average and the RSI signal line, and we have now entered the bullish control zone as well. Let's look at the 4 hour within that 6 hour pane. And okay, so the 4 hour is also pivoted towards the upside, about to make a bullish cross and entering the bullish control zone too. So this is more upside continuation. Let's go ahead and look at this lower pane down here, and this is the 8 hour time frame. Similarly to the 4 hour here, we're about to make a bullish cross, and we are entering the bullish control zone. Let's move on to the 12 hour and see what's going on. Okay, 12 hour upside pivot, about to make that cross as well. Let's look at the daily. Same situation, upside pivot. Tomorrow's likely going to be green for BBIG, and if we were to hedge, or if we were to day trade, that would be the tricky thing. So if this is suggesting, if the 30-minute is suggesting, or 15 and 5-minute are suggesting upside almost immediately, that means that we are going to succeed. That we're going to succeed this bullish formation here, and likely come and test the $1 area before a retracement to confirm our new support, and it would be the confirmation of the conversion of resistance into support. So we would essentially break out of here, test the $1, come back, trade a little bit sideways just for a little bit, and I mean minimum 2 hour. I would say a minimum 1 hour candle to confirm that we are in support before entry. So entry could actually be at 96 or 97 or 98 cents. We could also wick down to possibly 96 cents for another entry. So let's take a fib. Let's take a fib level here and see just what it's doing. We'll do it just from the range. So today's high to today's low, which is right down here. Okay, so yeah, the 1.272 is landing at just over 99 cents, which is kind of confluent with this resistance line that we have here. This could be the area where we can face some resistance and come back. Now, the next target, if we do gain entry at 96 cents or 97 cents, we could actually do a day trade to take profit 1 at the 1.618 at 101. The second exit could be at 104. I would actually make, man, this is discretion here, and not financial advice. You guys, please do do your own due diligence. Okay, I'm just trading based on what I see. I'm just sharing based on what I see. So I would actually make the stop number 2 or the exit number 2 at 106, and the last one would be the our runners. We can do them at the 2.618 at 109, which has some confluence with the top of the range at 110. So between 109 and 110 could be the final exit. So this can be a total trade of let's just say we entered at 97 cents and we went all the way up to the 2.618. This would be a 12.50%, or we can make it about a 14% trade if we did go all the way to the top and test the range high within the structure. And I say that it's pretty likely that we can, with enough juice, we can test this top here due to the simple fact that we are creating pretty consistent highs testing this resistance top. Anyway, that's it for today, guys. So if you have any questions regarding BBIG, please don't hesitate to reach out to me at, here on YouTube or Discord, and you can also DM me on Twitter, and we can go over whatever other tickers you have. But I just want to see if I have anything else to say. No, I think yeah, I think we're pretty good there. So anyways, guys, just have a good day, and thank you again for supporting me, and be sure to hit that subscribe button and give the video a like so we can be able to share this with other